Happy Friday, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Friday, the 7th of April, 2017. Thanks for joining me yet again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The big news overnight, of course, is the non-farm payrolls release. The non-farm payrolls and unemployment came in. The U.S. non-farm payrolls and unemployment came in at below expectations. The number is 98,000 jobs created in the month of March versus 180,000. This is the lowest we've seen since May of 2016, which I think came in at like 38,000, something like that. So pretty far off. Pretty far off from the expectation, about half of the expectation. The market responded by selling. The selling wasn't very aggressive. We dropped about 6 points in the S&P futures. The unemployment rate surprised by dropping to 4.5% versus 4.7%, the lowest since April 2007, April 2007, 10 years ago. We also got the Canadian March net change in employment at 19.4 versus 5.7 expected, beating their number by about a factor of 3. Looks like a few of the jobs from the U.S. went to Canada, maybe. And other than that, the big news overnight, of course, is the U.S. attack on Syria. The U.S. attack on Syria occurred at about 8 p.m. Chicago time, 9 p.m. Eastern, and we see a very fast drop in the market there. The market dropped 20 points in just about a half hour in the S&P futures. That's big news there. 59 missiles, Tomahawk missiles, were launched from a destroyer or group of destroyers in the Mediterranean against military infrastructure, specifically an airfield in Syria, which is suspected to be the launching point of air attacks by the Syrians and the Russians. So this is something that was a surprise to the market and has resulted in a sell-off. The market, however, has taken back the entire sell-off overnight. We'll look at that in a minute. The SOC, or the scene of the crime on the Syrian news, has been taken out almost to the tick to prepare us for the non-farm payrolls. And then, of course, like I said, we've sold off and we've recovered almost all of it, about 75% of what we had dropped on the number. The 10-year note also gapping up, of course, on the Syrian news, and then rising on the non-farm payrolls, and now it's moving into the gap zone that is left below it. There is no other, I don't see any other major news. Currently, the market sentiment is mixed. The DAX is lagging. It's down 60 points or 0.5%, followed by the Russell, then the Euro stocks. The Euro is also off by 0.3% or 31 pips. The Dow Jones is off 15%, 30 points. The S&P is off 3.25 points or 14%, and Nasdaq's off 4 points or 7%. The gainers, of course, security is safety is priority this morning. Gold, June 2017, is trading 1,267, up $13 an ounce, which translates to about 1.08, 1.09%. Followed by the U.S. Treasury bond, the Bund, the dollar, the 10-year, and then crude is almost unchanged at a penny. Currently, crude trading May 2017 still. So that's the rundown of where we are, the conditions that we're seeing currently, and looking ahead for the session as far as what is left. There were also quite a few releases from the UK overnight. I don't need to go over those. German current account, German trade balance, industrial production in UK had a bunch of different numbers. Just you can look those up. The remaining releases for today, we have a 10 a.m. wholesale inventories for February in the U.S. expecting 0.4%, 0.4%. We're also getting wholesale trade sales month on month for February. No consensus. We get the Baker Hughes rig count at 1 o'clock for those energy traders. This is for April 7th week, this current week. That comes out at 1 o'clock Eastern. And at 3 p.m., we get consumer credit for February, expecting 15 billion. The previous is 8.8 billion. And as far as speakers, the only speaker we have left is at 12:15, Fed Speaker Dudley. However, this is another one of those days that is where it's important to have a good news feed or good news source. There's likely to be a fair amount of conversation today regarding the Syria situation. The Russians have asked the Security Council for an emergency meeting. The Russians are saying, the Russian government is saying that this strike further creates problems or aggravates problems between the U.S. and Russia, and also we know that the Russian government was informed or warned of this attack before it was launched, and they confirmed that there were no Russian military personnel injured. So throughout the day, I'm expecting I will not be here. I'll be traveling. The kids are on spring break here today, starting today. But I expect that throughout the day, there's going to be news coming out, especially since there's just so much news flow from this administration. So keep an eye on that. I'm expecting, generally non-farm payrolls day, you get a move, then it goes dead fairly quickly by the European close, which is about 11:30 Eastern. It goes completely dead. But today I'm expecting it to continue to be fairly active throughout the session, given this geopolitical issue that we're confronting here. Let's switch gears and look at what we had yesterday, what we had planned for yesterday. Yesterday, the primary hypothesis in preparation for the non-farm payrolls, the primary hypothesis after the sell-off on Wednesday was for an open auction on the open, and I was looking for a push towards a 2360 area. I'm looking for a push to the mid of this move right here, which is about 2361. And then the expectation is that we'll have a failed attempt at the high, and then I expect it to close somewhere in the middle of the range. That's basically what happened. Here, let's look at what the market actually gave us. Here it is. So we have an open auction. There's your downswing. There's your upswing. This gives us the opening swing right there. We test that opening swing by pushing towards the low. I did not quite expect that. This was a pretty sizable rotation here, 8 points down, and then it was immediately followed with a 9-point rally and then sideways. And here's where we cut off. We cut off at 2361.25, just one tick beyond the mid of the prior day's drop, just where it's expected. Remember, 2360, according to Hypo 1, 2360, 2361 was expected to be the resistance point, and it resulted in this almost 12-point drop fairly quickly here in about an hour, and then the market ended up sideways. So what you have here is an opening swing, an open auction, and then we have a push to the high. What we didn't get, according to the hypo, is another attempt at the high that comes up short, and then I was looking for the close somewhere in the middle. Here's what it looked like. There it is. The yellow is what was expected. The white is what we got. And the reason I'm showing you this is not to raise my hands up in the air in celebration and say, look at me, I got this right, look at how perfect it is, or whatever. I'm just simply telling the purpose of this truly is to say that there is a rhyme and reason and rhythm to the auction. So understanding the auction, if you have been watching these almost 900 videos, actually it's over 1,000 now, combining two YouTube accounts. If there's one thing you'll want to take away is that a process and there is a process innate to the auction, and that process impacts your trading no matter how you trade, whether you're using floor pivots or fibs or moving averages or whatever. Understanding the auction helps give you the context of which trades are likely to be the stronger trades on any given day. And that's really the point, one of the points that I'm trying to make with these trader bites, okay? The secondary hypothesis here is an attempt higher early, unable to reach 2360, and then the market gets its sellers. We're looking for an impulsive move down, but still we're looking for the market to close somewhere in the middle where it opened. Of course, that didn't happen because the opposite plan took place. Okay, so that's what happened yesterday. Let's look at what's happened overnight and since. Here's the overnight session. So this is this profile here is the day session. So you see that little dashed box there. If you don't see it, switch your screen or your YouTube feed to 1080p so you can see it more clearly. And then this box here, the longer session, these are 15-minute bars. The longer session is the overnight session, what I call the overnight session. I'm in the US, but it's the Globex session. And what happens here at 8 p.m., the US attacks Syria, and the market drops from 2356 right up here, 2356 all the way down to 2336.75, about 20 points, a 20-point move on that news right here. And then what it does is it immediately gets buyers. So here's this buying bar. So this is typical of news, right? The news we tend to overshoot. Why do we overshoot? How does that make sense in the auction? We tend to overshoot because the market is more likely to have stops, selling stops underneath it than buy stops above it. And so when it starts to trigger, it triggers a lot more because there are curbs on shorts, but there are no curbs on longs, right? You can open an account for $3,000 and go long a stock. You can't do that going short a stock. And so it tends to move down a lot more quickly than it moves up. And so once those clear, now you get this buying frenzy that occurs immediately. And then the market then digests the news, makes its next move. So this is wave one. That's wave one, the green bar. And the top of this bar is wave two. And then this is wave three, which tends to continue the move. And in this case, because it's on news, geopolitical news, there was no wave three that continued. Here, wave three is expected to go below wave one's low, a continuation move, and it wasn't able to do that. And as soon as you see that, as soon as I see that, I immediately start to look for the trade on the long side and a trip back to what I call the SOC, or the scene of the crime, or the spot from which the auction was interrupted. So think of the auction as something that just kind of moves along, da 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 da, it's auctioning, and then suddenly it's interrupted. Okay, and when the auction's interrupted, it generally breaks, and then the market eventually comes back, and then it just resumes this auction as if nothing ever happened when the news is discounted. If the news is fundamentally changing valuations in the market, then that's not the situation. But here, this is a hedge immediately, a move to protection. You can see the move in the 10 years and gold. Money immediately moves out of risk into safety, and then now it's being reallocated to risk. as the major indices are moving closer and closer towards yesterday's close. In the S&P 2353.50, and here we are trading just 2 points below yesterday's close. So this auction basically has been everything below here has been discounted by the participants in this auction, and overall we have a good base underneath us this morning. Now, the news of the non-farm payrolls is right here, this red bar. The non-farm payrolls had an SOC of 2351.50. That is the point from which the news came in and the market dropped. The market dropped to 2345.50, 6 points, a 6 point move on a non-farm payrolls miss of about 50%. That's a pretty small move. And then now we have gone back again. We are trading exactly in the SOC. Remember, the scene of the crime for the non-farm payrolls unemployment release was 2351.50, and the market's trading 2351.50 right now, and it's just been sitting here. So it has discounted this information. So caution on a continuation up, as the market was in the process of making a continuation move earlier on. Now it's made a lower low, and you would expect it to push lower. However, looking at the treasuries and looking at where it is now, it looks like it is likely to just continue to auction to the upside on the open. So I'm expecting this to continue higher on the open, which is counterintuitive. The other thing is, just from a macro perspective, the market's pricing in a June hike. Bloomberg's reporting that there's a 66.5% chance that the Fed will hike in June or sooner. So the market's already pricing in more rate hikes, and taking into account the cause of the sell-off here on Wednesday. With the Fed basically wanting to trim its balance sheet. This gives a lot of incentive to the sellers, but the sellers are failing to hold prices lower. I mean, you had, let's go back to the day session and look at how this is auctioning on the day session. So let's bring in this profile and move it forward. So this is the news on the FOMC right here. That's the FOMC news. The minutes showing that the Fed wants to trim its balance sheet. That's pretty negative news because you have a massive buyer in the market that is stepping aside. And so as we move this forward, we're filling in the profile. So watch this profile over here. This is where it's the volume's being added as I shift it forward. So you can see here we added a little bit higher, and then we're back into the middle in the belly of the profile, and we are trading right up against the MC point of control, which shifted slightly yesterday. But yesterday we are the MC point of control is at 23.55. That's basically where we finished the day yesterday, and the market's completely imbalanced. The sellers are not able to hold the market down, but we have pretty good resistance up above us now with that M formation that was made on Wednesday. I still expect that we are likely to see this triple, quadruple top here from last week. You see this here. It carries over into this profile, and I'm expecting this area to show some pretty decent resistance on the way up. This is an opportunity that I will not pass up. 2366, 2367 will likely be sold. I'll likely look to sell that on a first attempt. But overall, the market's in complete balance and has been sitting sideways now for about 2 weeks, and I'm not expecting any different. I'm out of time, so let's get down to the hypotheses. This morning, let's turn off these flex levels. This morning, the expectation, I'm looking for, the market had a balanced profile yesterday. The value high and the value low are valid for yesterday. So value high is at 2356.75. Value low at 2351 and a quarter, which is also the NFP SOC, the non-farm payrolls scene of the crime. I'm expecting this to be a noisy open. I'm looking for the market to immediately test lower and then move up, test the other side, and then hold sideways today. Again, if news comes in, that's something completely different. If news comes in, it might push us out of the way, but I'm looking for the big move, the impulsive move to be to the upside today. That's my hypo one. I'm looking for buyers to continue to fight this area and attempt to push towards 2366. 2367. That's a key area up there. Again, we're carrying forward the quadruple top here intraday, double top between 2 days, the low, the pivot point for the M formation. I'm expecting that to be a classic resistance point on the first touch. It's not something I'd keep using again and again. Again, I look at trading levels or zones as like Kleenex. You use it once and you throw it away until the market pushes through, then it refreshes and you look at how the market responds when it comes back to it. I don't take levels more than once. That's the primary hypothesis. Secondary hypothesis, if we open and immediately get buyers, I'm looking for the value high to present resistance initially. I'm looking for it to return, and then I'm looking for it to try again to push in and through 2360. It tried yesterday and failed, and then look for it to start moving towards 67, and then for that to fail back, and then for the market to close in the 2360 area. 2360 is expected to be the area that the market closes at. Wow, I couldn't make a circle there. The other alternatives is if hypo 3 is we open, we test immediately, and then we get an impulse down. If we get an impulse down, then look for the overnight low to be taken out as bigger participants evaluate the Syria situation. Essentially, the current administration is pulling us into a war in Syria, and that's likely to make some investors nervous. And then look for a move to 2336, and then I'm looking for 2332 as the potential distant target, and that's if the Syria news is responded to by investors. Then look to the downside. In either case, I'll be looking for a push higher that is fought for an opportunity to sell short and look for the continuation. Anyway, that's where I'm going to leave you. Remember, before you run off, it is Like Friday. Hit the like button. If you don't see a like button on your display there, just look for the YouTube symbol. Pull up the YouTube symbol and then hit the like button. It is Like Friday. And then the other thing is on April 19th at 4:30 Eastern, I'm doing an AMA for Futures IO. The invitation for that will be going out. It's also on the website, futurestrader71.com. Just hit the blog button and you'll see the invitation there if you want to register early. Seats are limited to about 500 and we generally cap that out. Good luck and I'll catch you later. Take care.